last week, Nigeria's equities market recorded its first weekly gain this month on the back of gains in bellwether stocks, which drove positive returns. Moses Hamed, a research analyst at Investment One Financial Services, tells us what to expect this week. Moses, thank you for joining us today. Let's get right to it. It would appear that investors, bellwether stocks, the big caps remain investors' favorites. But where do you see them bargain hunting this week?
I think this week we may still see some names in the banking space as well. I think the last week we saw massive gain in some insurance names. The likes of Consolidated Orman, NEM gained massively last week. But this week, I think banks may still be the toast of the investors. And then we can still look at the likes of banks are still there that can still move the market. Although if you look at the trend recently, those sectors, particularly banking sector, if you look at what they did recently, they have been trying to recover. Although for the year, it's still down, and then it's most likely that it will take time before we see that improvement. But generally, I think banks are still going to be the toast of investors, even for the new week.
Speaking about trends, it would appear that yields at the fixed income market are looking a little bit more attractive. Should we expect some defections in the coming weeks?
I think a lot has been factored into that. Markets has already reacted to that trend, and I think at the last NTB auction, we saw they maintained NTB rate at the same level, 1 year stop at 9.75%, and I think it's going to give an indication that maybe this is the end of the upward trend that we are seeing in the fixed income in terms of yield in the fixed income space. And that may be good for equities market because a lot of investors are on the sideline seeing where the yields will be in the fixed income space before they can decide whether to come to the equities market or to play in the fixed income space as well, because you need to consider the level of inflation, which is still very high, currently 18.17%. And I think investors will still be looking for where they can get better return that will reduce, if possible, cover for that inflation level. So I think that will still shape the mind of investors going forward. But at this level, I'm sure, I think a lot of investors have reacted to that uptrend in yields in fixed income space.
Now, for the foreign investors, what can you say? What are your thoughts on their sentiments towards Nigerian stocks at this time? Would you say that current valuations are worth the risk or the headache of having to deal with the FX issue or challenges that we currently have?
I think the major thing for most investors, foreign investors particularly, is FX issue. I think until we get that level of confidence from CBN in terms of ability to maintain FX rates and defend local currency, so that investors, when they come in, they will not suffer capital depreciation from devaluation. I think that will still shape the direction going forward. I think a lot of investors, particularly foreign investors, are not really keen to the equities market now. I think even last year, we discovered that it was driven majorly by local investors. And so far this year, I think local investors are still the major player in the market. However, we've seen some foreigners come to the market, but I think what will shape or what will determine whether FPI will come to our market is the level of confidence that CBN can give to the public or to the investors about next direction. And you can see there'll be some adjustments. So to what level would that be to attract FPI? I think FPI will want a stable FX situation and most likely a unified FX rate so that they will be sure that when they come in, at least they can come out without being significantly affected by devaluation.
Well, but that being said, what is your assessment of current valuations in the market, Nigerian stocks, compared to their other African pairs or emerging market pairs, particularly from a dividend yield perspective too?
So I think generally, if you look at valuation-wise, even if you look at our P ratio, it's still quite cheap to some emerging and frontier names. However, even dividend is still quite attractive at this level. But again, with what I mentioned about the FX devaluation issue, I think that will still shape what we expect going forward. And at this level, I don't think investors are still confident to come to the market. And talking about fair value of Naira, I'm not sure a lot of people are confident that this level is a fair value for Naira. I think a lot of analysts are looking at Naira at 430, so that it will be stable around that level. But if you look at where we are at the earning window, I think it's still not there yet. Although you should look at where we are in terms of the parallel market rate, we are far above that. But at a point, investors want some kind of adjustment or unification in FX rates. And at around 430 appears to be the rate that investors are looking at. Maybe in the next 1 year, Naira should settle around that 430 levels. I think that should give confidence to the market and FPI to come in